Hi friends, welcome back to my channel. This is CA KVN MAHESH, and today I would like to give review of a small finance bank IPO which is going to hit the market on 17th of this month. That is Suryoday Small Finance Bank Limited. So what is SFB and how it is evolved? Despite various measures taken by the government to increase financial penetration in India, a significant percentage of India's population does not have access to basic financial services. So in 2013, RBI constituted a committee that recommended differential licensing in the form of payment bank and SFBs. Accordingly, on November 2014, RBI released guidelines for a new class of banking entity named small finance banks. And on September 2015, RBI awarded SFB license to 10 players. And this is how SFBs are evolved to provide support to the diverse needs of the low income group. The objective of SFBs is to extend banking service to the underserved and unserved population through saving instruments and providing credit to small business units, small and marginal farmers, micro and small industries, and other unorganized sector. Suryoday Small Finance Bank Limited is among the leading SFBs in India, incorporated in 2008. It started operations as a small finance bank in 2017, and as of December 2020, its customer base was 1.44 million and it operates 554 banking outlets including 153 unbanked rural centers promoting financial inclusion. Before SBF, the company operated as non-banking financial company carrying out microfinance operations. As per CRISIL report, the company had the lowest cost to income ratio among SFBs in India in fiscal 2020. The bank offers a variety of products and services such as commercial vehicle and affordable housing loans, along with loans to MSC, that is micro and small enterprise, and SMEs, that is small and medium enterprise, and secured business loans, etc. And their gross loan portfolio has grown at a compounded annual growth rate of 46.98% from March 2018 to March 2020. The bank was promoted by Bhaskar Babu Ramchandran, P. Surendra Pai, P. S. Jagadish, and G. V. Alankara. As of the date, the promoters in aggregate hold 2,97,34,732 equity shares in the bank, representing 30.35% of the paid up equity share capital of the bank. For augmenting Tier 1 capital base of the bank and to achieve listing benefits, company is coming out with a maiden IPO of 1,90,93,070 equity shares of Rs 10 each with a price band of Rs 303 to 305, and this composite issue has 81,50,000 fresh issue and an offer for sale of 1,09,43,070 shares. At the upper price band, the bank will raise 582.34 crore. The issue opens for subscription on March 17 and will close on March 19, 2021. Minimum application is to be made for 49 shares and in multiples thereon, translating to a minimum investment of Rs 14,945. And a retail investor can apply for maximum of 13 lots comprising of 637 shares with the investment of 1,94,285. The company has set subscription limits as not more than 50% of the net issue for QIBs, a minimum of 15% and 35% for non-institutional investors and retail investors respectively. Up to 5 lakh equity shares has been reserved for eligible employees and provided a discount of Rs 30. The allotment will take place on 24th of March. Refunds to those who fail to get the allotments will begin on 24th March 2021, while the credit of shares into the demat account of the lucky bidders will take place on 25th March 2021. Post allotment, shares will be listed on both Bombay Stock Exchange and National Stock Exchange tentatively on 30th March. Post issue, promoters of the company along with their group will hold 28.02% of the equity share capital of the company. And the company has undertaken a pre-IPO placement of 52,08,226 equity shares at a price of 291.75 per share, aggregate into 151.95 crore. You can see the allotment of the shares over here. The book running lead managers to the issue are Axis Capital Limited, ICICI Securities Limited, IIFL Securities Limited, and SBI Capital Markets Limited, while KVN Technologies Private Limited is the registrar to the issue. Most investors and IPO analysts check the profile of a lead manager before applying to an IPO. On a summary note, the 4 lead managers have handled 33 issues in the past 3 years, out of which 11 issues closed below the issue price on the listing date. That is, almost 2/3% of the issues are listed above the issue price. This is a positive point to be considered. If you see the financials, total interest earned by the company, that is revenue from operations, as you know that the interest income is the main source of income for banks, we can see a huge growth from 287 crore in 2018 to 530 crores in 2019 and 767 crore in 2020. Company has posted a growth in revenue around 85% in 2019 and 45% in 2020. And even if we see the net profit of the company, it shows a positive growth for the years 2018 to 2020. It has earned a net profit of 11.49 crore for fiscal 2018 and 90.4 crores for fiscal 2019, which is almost 687% more than the 2018 figures. And it has earned a net profit of 111.2 crore for fiscal 2020, posting a growth of 23%. Here, if you observe the top and bottom line numbers for 9 months ended December 2020, we can witness around 11% growth in revenues from 563 crores to 624 crores, but there is a negative growth in the net profit around 57% from 126.88 crore in 2019 to 54.87 crore for 9 months ended December 2020. This is mainly because of two reasons. One is write-off of loans amounting to 62.6 crores provided to inclusive finance, that is joint liability group customers, and unsecured MSME SME loans. And the second reason is increased general provisioning in the last week of March 2020 and during the 9 months ended December 2020 due to continuing impact of COVID-19, including moratorium availed by the customers. And for the last 3 fiscals, the company has posted an average EPS of 11.33 and an average return on net worth of 8.99%. We can see over here that the net interest margins are around 10.4%, 12.8% and 11.92% for 2018, 2019 and 2020 fiscal years respectively. As per reports, Suryoday Bank is the leading bank in India with respect to net interest margins. Listed peers for this company are Ujjivan Small Finance Bank Limited, Credit Access Grameen Limited, Spandana Spurti Finance Limited, Bandhan Bank Limited and AU Small Finance Bank Limited. Among the listed peers, Suryoday SFB and ESAF recorded the fastest 3-year asset under management growth rates of 64% and 66% respectively in financial year 2019-2020. And the company has the third highest deposit growth rate of 79% and has the highest capital adequacy ratio of 29.57% in fiscal 2020. Suryoday SFB has the second highest yield on advances and return on assets of 22.5% and 2.5% and 2.4% respectively when compared to other SFBs, and also it has best cost to income ratio of 47.1%. On looking at these stats, we can say that the company is performing well when comparing with the other peers. For the period ended March 2020, EPS of the company is 13.41 per share, whereas EPS of Spandana Spurti Finance Limited is 56.21 per share. Return on net worth for this company is 10.43% and return on net worth for Bandhan Bank Limited is 41.08%, and while it is 12.27% for Credit Access Grameen Limited. Net asset value per share for this company is 123.13 per share, and whereas net asset value of the Spandana Spurti Finance Limited is 408.29 per share, and it is 2.19 for Ujjivan Small Finance Bank Limited. You can see the price to earning ratios of the listed peers over here. At Rs 305, that is the upper price band limit of the issue, the annualized PE of the company based on 9 months EPS will be 44.27 as against industry composite PE of 25.15 per share. From this, we can say that the issue is aggressively priced based on comparison with the listed peers. Small finance banks have grown at a compounded annual growth rate of 29% from fiscal 2017 to fiscal 2020 in terms of asset under management. Further, it is expected the loan portfolio will grow at compounded annual growth rate of approximately 22% in the next 3 years. Suryoday accounts 4% of the industry AUM as of fiscal 2020. On account of the recent crisis with S Bank, several private banks are finding it challenging to convince depositors to maintain deposits. Even though small finance banks are newer entities in the sector, higher deposit interest rates offered by them and the increased deposit insurance amount of 5 lakhs from earlier 1 lakh attracts more customers to deposit in SFBs. For instance, Jena SFB, Suryoday SFB and Equitas Small Finance Bank offers 7.5%, 7.25% and 7.10% respectively for a 1-year deposit, while established players such as SBI, HDFC and Kotak Mahindra Bank offer 5.5%, 5.25% and 5.15% on deposit of a similar tenure. Small finance bank deposits are expected to grow at a compounded annual growth rate of 40 to 45% from 1,135 billion in fiscal 2021 to 2,328 billion in fiscal 2023. With respect to microfinance industry, it was estimated to grow at a compounded annual growth rate of 24%. Coming to microfinance industry has grown at a compounded annual growth rate of 24% from 2017 to 2020. And it is expected to grow at a compounded annual growth rate of 16% from 3,258 billion in 2020 to 5,580 to 5,058 billions in 2020-23. PAR is the most widely used measure of portfolio quality in the microfinance industry. It measures the portion of loan portfolio affected by delinquency as a percentage of total portfolio. As of March 2020, overall PAR for the industry as a whole was 1.79%, but small finance bank has better asset quality with PAR lower than the industry average. Small finance banks differentiate themselves from other banks by offering personalized services to customers. These include home visit for deposits, withdrawals, credit underwriting, loan collections, and maintaining close customer touchpoint on a monthly basis. However, the national lockdown and social distancing norms have put a stop to small finance banks' doorstep service. This has prompted them to increase their focus on digital initiatives. So, small finance banks that have already transitioned and made requisite investments in people, process, and technology are expected to reap more benefits and grow faster than their peers. Customer-centric approach with a focus on financial inclusion. As of December 2020, companies served 1.44 million customers, and in the period between 2018 to 2020, their customer base has increased by 0.65 million. Their inclusive finance portfolio, that is comprising loans to joint liability group. So, joint liability group is an informal group comprising of 4 to 10 individuals coming together for the purpose of availing bank loan on individual basis or through group mechanism against mutual guarantee. It accounts almost 70.35% of the gross loan portfolio as of December 2020. And given their operating history as a microfinance institution, a significant portion of their portfolio continues to qualify as priority sector lending as mandated by the RBI and helps them promote financial inclusion in India. Fast evolving granular deposit franchise. Their deposit base has grown at a compounded annual growth rate of 94.95% from 749.52 crore as of March 2018 to 2,848.72 crore as of March 2020. Suryoday Small Finance Bank is among the SFBs with the highest deposit growth rate in fiscal 2020, which I have already mentioned. Track record of strong financial performance on cost-efficient operations. Company has been growing since their conversion as an SFB and are currently in a robust financial position that will enable them to expand their business quickly. Their cost-to-income ratio is lowest among the SFBs in India, and their cost-to-income ratio has reduced from 64.44% in 2018 to 55.39% in the 9 months ended December 2020. Their operating expense ratio as percentage of the average balance of gross loan portfolio has also been reduced from 10.72% in 2018 to 8.38% in the 9 months ended December 2020, which is a positive point to be considered. Multiple distribution channels. Banks' distribution and service channels comprise their banking outlets, ATMs, phone banking, mobile banking, tablet banking, CSPs, and internet banking services. As I have already mentioned, company operates as of December 2020. Company operates 554 banking outlets, including 153 URCs across 13 states and union territories. Experienced leadership team, professional management, and strong corporate governance. Company is a professionally managed bank led by Bhaskar Babu Ramachandran, their founder, managing director, and chief executive officer. He is a first generation entrepreneur. He has several years of experience in the financial service sector, and he held leadership positions in companies like HDFC Bank Limited, GE Capital Transportation Financial Service Limited, etc., which is an added advantage to the company. Concentration of revenues. As of December 2020, 70.35% of their loan portfolio includes advance to their inclusive finance customers, that is JLG group customers, primarily comprising of small traders, individuals with micro enterprises, and others belonging to the unorganized sector who are most impacted due to economic downturn caused by COVID-19. Any adverse developments in the microfinance sector, including any regulatory changes, could adversely affect companies' business, financial condition, results of operation, and cash flows. And also, top 20 depositors accounts around 45% and 39% of the total deposits of the company for the fiscal 2019 and 2020. If any of their top customers reduce or remove their deposit accounts from the bank, the deposit portfolio, funding sources, financial condition, results of the operation, and cash flows could be materially and adversely affected. Company's business is vulnerable to interest rate risk, and any volatility in interest rates or inability to manage the interest rate risk could adversely affect their net interest margins, business, financial condition, result of operations, and cash flows. Contingent liabilities. Contingent liabilities amounting to 48.76 million have not been provided for in the financials, and if they materialize, it may adversely affect company's result of operations, financial condition, and cash flows. Negative cash flows from operating activities. If you see here, the company has negative operating cash flows in 2019 and for 9 months ended December 2020, amounting 5,451 million and 1,525 million respectively. Negative operating cash flows will definitely impact the cash flow requirements ability to operate the business and implement the growth plans, and in turn the financial condition of the company. Majority of the advances are unsecured. Companies inclusive finance, JLG loan portfolio, unsecured overdraft facilities, micro business loans, and unsecured MSME SMA loan portfolio are not supported by any collateral security. And in the event of non-payment by a borrower of one of these loans, company may not be able to recover unpaid amounts in a timely manner, which may affect the financial condition, result of operation, and cash flows. For 9 months ended December 2020, company has made return of 626 million of loan amounts provided to them. As a result, we can witness a negative growth in net profit for these 9 months. Inability to grow CASA deposits, that is current account and saving accounts deposits, which are cheapest and major source of funds for the banks. As of December 2020, company's CASA ratio was 13.32% and it may not be able to grow the ratio due to increased competition from other banks. This might result in high cost of deposits and will impact the company's financial condition and cash flows. Company has received a good response to its shares in the grey market ahead of its initial public offering. On 15th of this month, the shares are traded at Rs 32.35, that is around 10% premium over the issue price. If we see the current sentiment and the IPO market in India, they have been very positive for all investors over the last 2 quarters. So on a closing note, here are the key points to be considered before subscribing to the issue. One is grey market has reacted positively prior to the issue, and also from lead manager's point of view, almost 66% of the previous IPOs led by them are oversubscribed and listed at high premiums over the issue price on the listing day. Except for the current financial year, company has posted growth in its top and bottom lines. Due to the pandemic scare, it suffered a setback for the first 9 months working for the current fiscal. However, management is confident for speedy recovery going forward. Considering aggressive pricing and negative cash flows from operating activities, risk-savvy investors may consider investment at their own risk. We strongly advise you to make proper research before making any significant investment decisions. That's it for today, guys. Hope you learned something new. If you like the video, please share with your friends and don't forget to share and subscribe my channel Financial Hacker. Thank you. See you guys.